Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at the US eminis over the last couple of days and basically show you how you don't have to have a big move in the markets to actually make good money when trading. It's all about how your profits relate to your initial risk or losses. A good example of this is yesterday. You can see yesterday, which was, if I put the session breaks on, February the 3rd, the US markets went down quite significantly. STF was red, therefore you'd only be looking for sell setups, you'd be avoiding the buy setups, therefore there was pretty much nothing to do. So does that mean you've missed out on a trading opportunity? Well, not really, because it doesn't matter, or you don't have to trade every day, particularly on big move days. Normally big move days means you have to have bigger risks, so it actually defeats the object. So for example on this, if I go back to the day before, which was this day here, which was January the 31st. Again, I'll keep looking at the YM. Here we have STF was red to start with, so we did have a sell set up here, which actually would have been a losing trade, but the loss was kept small and under control. That's the important point. We did have another trade set up later in the day here. STF was black, therefore standard and advanced traders could take that. If we do the analysis here, you can see that it would have been a nice 4-hour profit at the first target. But what I want to do is I want to have a little bit of a closer look at this particular trade setup, which I'm just getting the zooming right, this trade setup here, to show you how advanced traders would have maximized the profit on this. And this is what we teach in MTPredictor. We don't teach just using the standard trade setups, we try to teach you to go to higher levels with more advanced techniques. So this is what the more experienced users would have done with this particular trade setup here. First of all, as we know, it's a standard trade setup, as I've already said. But for the more advanced users, you'll have seen that this was actually a 5-wave pattern on the Elliott wave module with the high unfolding at the minimum wave 5 WPT. We know from our training that the initial target from a move off a completed 5-wave sequence is the DP from the wave 4 extreme, which is what this DP is here. If I just take this off and I put it on from the wave 4 extreme, you can see it's in the same place. But we also know that if this DP is exceeded, then the move will most likely go back to the DP from the entire prior sequence. So if I go back to the start of the sequence, which is here, I place this DP on here, and this is the area, I'll just make that a little bit smaller, this is the area of where the market is likely to go to, and you can see that's exactly what the market did. Let's bring our target down to this particular level here, and you can see suddenly it increases your profit from 4 risk units, 4R, to approximately 12.5R, or over 12 times the initial risk. So was there any reason why users would expect that the market was going to keep on going down like this and would exceed the first or initial target? Well, yes, there was, because if we go to the higher time frame chart, which in this case was the 15-minute chart on the YM, you can see that at the time of our 3-minute DP sell, we actually had a TS2 sell on our 15-minute chart, which indicated that the large degree trend was down, and actually was down into the early part of the next day, which was February the 3rd. So therefore, with the large degree trend down on the higher time frame chart, even the more experienced users could have anticipated that the shorter term trade on the 3-minute chart would have exceeded the first target, and as such go out to the second target. This is why we teach people to take MTPredictor to much higher levels, because not only does it help you filter your trades with MTPredictor, but it also allows you to anticipate larger moves with the software, and this is a great example of how they could have done that. But I also wanted just to remind you that although there wasn't any big moves on Monday, you can see here this move here is quite small relative to the move we had yesterday. It does not mean that you are actually going to make smaller profits on days when the market doesn't move. Remember, your profits, particularly if you use correct position sizing, are relative to your losses. In other words, relative to your initial risk. And that's what's important. It's important to have trades where your initial risks are small and your profits are large. So I just wanted to do this video particularly on a day where we didn't get any automatic setups on a big move day, to show you that just because we didn't get a trade on a big move day, it does not mean to say you're missing out on trades, because the day before we had an absolutely brilliant day where you had a profit of approximately 12R or turning an initial risk of approximately $400 into approximately $5,000. So a very, very good trade indeed. It's also a good example of how the more experienced MTPredictor users can amend the standard trade guidelines, particularly when they actually look at the large degree trend and see how that fits in, and also with our techniques that we teach for how a market moves when it's completed a 5-wave pattern. So a great example of how you can use the tools in MTPredictor to take your standard MTPredictor trade setups to much higher levels once you become more experienced with the software. And this is what we teach in our ongoing training webinars. So as you can see, a very good day for MTPredictor on the 31st of January. And as you can see, it does not have to, or it doesn't mean that you have to have big moves in the markets to make big profits. It's all about your profits in relation to your initial risks. That's what the most important thing in trading is all about.